Hello traders, it is Sunday, September 8th, and it's time for our weekly video. We had a lot of market movement this week. We're going to be getting into that in just a second. If you like this content, please hit the subscribe button. Please hit the like button. That's going to help the algorithms find my YouTube channel, and I'm going to be able to reach more and more traders. I'm trying to teach you a systematic trading approach that really works. The best way for you to determine that is to go back and look at my previous videos. Every single video, I give you a pick, then we review that pick in the next video. I use the systematic approach to find a new pick. That's what I'm going to be doing this week. So what I've done is I've lined up some of my recent picks, the last 4 bullish picks and the last 4 bearish picks. The market has been very undecided. I've told you exactly the type of patterns that I'm looking for, and I've been giving you picks on both sides so that you're ready regardless of which way the market goes. And I'm also going to be demonstrating the beauty of trading relative strength and relative weakness. If you look in the lower left-hand corner of the Option Stalker platform, I'm just going to click through these symbols. These are my bullish picks that I started off with, and I've got 4 of them. These are my most recent 4 bullish picks. What has the market done? Well, Friday, it sold off hard. What did Abbott do? Look at how beautifully that stock has held up. Relative strength. On the wrong side of the market, but the stock holds up. That is a huge edge to have. RTX was another pick that I made back in here. You can see it's roughly right where it was when I put the pick out there. Again, we were looking to day trade these picks. Walmart was a pick that I highlighted 2 videos ago. Look at how well Walmart held up. If the market had been going up, all of these picks would have been leading the charge. And we know that just based on the price action that I'm showing you. MDT. That was a pick that I showed you during Wednesday's live event. And you can see how the stock is just about where it was at the time of that live event. Now, the bearish picks have done extremely well because the market has had a slightly bearish tone to it. MU. That one was posted 2 weeks ago. And you can see on MU, look at the drop in that stock from, let's call it $104 down to $86. AA, Alcoa, another big drop. And look at the sell-off on Friday. Look at the selling that we've seen in these stocks, especially Friday, because finally the market showed us its true colors. So you had MU, AA, Coin, AAP, CELH were just absolutely lined up for you. But look at how the stock has continued to fall since I highlighted that over a week ago. AAP. This was one that I showed you Wednesday during a live event, and it was a real toss-up because we had a bearish alert in Option Stalker Pro, and I like the price action, so I decided last minute not to go with the AAP short, but to go with CELH. And you can see how since Wednesday that stock has continued to get pummeled. And then CELH didn't do a whole lot on Friday, but you had plenty of other shorts, and this is a 5-minute chart that you could have taken advantage of. Coin. Look at that drop. That's from about $160 down to $147. AA, $30 stock down to $28.50. Really just nice stuff. So please go back and watch my previous videos. Get a feel for the systematic trading approach and then do everything that you can to learn it. So let's take a look at the market. And as I mentioned earlier, we had this big sell-off that happened in August and this big rebound, 10% sell-off, and we rebounded almost to within the previous high. So we didn't really know over the course of the last 2 weeks which way the market was going to go. And we had a number of different catalysts, and each one of these catalysts, we were in wait and see mode. Let's see if we break out to the upside. Let's see if we break down to the downside. Well, this long red candle that we had last week, this was Tuesday after we came back from Labor Day weekend, that was kind of a clue that we might be favoring the downside, but we were resting right at that 50-day moving average and waiting for the all-important jobs report on Friday. That certainly had the potential to be a catalyst to break us down or to break us out. And so that number came out Friday before the open. There were 140,000 jobs, roughly. 164,000 jobs were expected during this jobs report. But the key element that I saw in the jobs report was that hourly wages had been revised upward 0.4%. That is a hot number. That's a hot component. That's the largest input cost for manufacturers. That is inflationary. In fact, it had gone up 0.7%. The only reason they reported 0.4% was because the average hourly week had declined. So because people weren't working as many hours, that number wasn't at 0.7, it came in at 0.4. So there were 0.3 less hours worked. So that accounted for the difference, and I suspected that the market was not going to like that number. Additionally, there were about 85,000 fewer jobs because we had revisions to the prior 2 months. Okay, so the jobs haven't been as good as we thought. We also saw fairly weak JOLTS reading this week, job openings. We also had a fairly soft ADP number. The initial reaction by the market on Friday was to rally. So things looked really good. Market was opening higher, and it looked like we might get a nice rally. Overseas markets on Friday were also a little soft overnight. So we had seen some selling pressure before that unemployment report. What I'm going to do is I'm going to put you into my chat room so that you can see what I was telling members on Friday. These are my pre-open market comments from Friday. You can see they're extensive, and you can see that these came out about 8 minutes before the open. So what I had mentioned was how the number came out, how the market had initially interpreted the number, and then what everyone needs to be watching for. And in particular, I'm going to focus on this paragraph because it's really important. I painted a few different scenarios that could play out and the ones that would favor us the most. So given the price action, let's observe the first 30 to 45 minutes. We're waiting for that breakout or breakdown. And from a bullish standpoint, here's what we want to see. We wanted to see, I knew there was going to be a bid check at some time. What does that mean? That means the downside is going to be tested, okay? I don't know if the market's going to try and rally up and continue to go higher, and then we get the bid check, say an hour and a half into trading, or there's a possibility that right out of the gate, that gap up is going to be challenged, and we're going to see stacked red candles, and we're going to start filling the gap in immediately. That would tell us that very likely that we are going to see a gap reversal, and the market opened above. You can see this is Friday's candle, this little purple line that we see in the background here. That is the 50-day moving average. You can see that the open of that red candle is above the 50-day moving average, and the market did try the upside. And what I had mentioned in this first paragraph is that if that 50-day moving average is taken out with ease with long red candles, that is bearish. We are going down. And I felt that the number was pretty soft. I didn't like it. So that was what we really needed to be watching for. And here you go. If the early bid check features an instant series of stacked red candles and we easily drop below the 50-day, with a rising VIX, that would be a bearish sign of a gap reversal, and you should favor the short side. We've been waiting and waiting and waiting for this breakdown. So you should have been ready to pounce on it, because for the last 2-3 weeks, we've been waiting and waiting for a catalyst. We haven't had one. We've been trapped in this range. And so we're in wait and see mode constantly. But each time we get one step closer to that breakout. So if it wasn't the previous news event, it'll be the next one. If it's not that one, it'll be the next one. So what we've been doing is highlighting bullish and bearish picks. And for all members, I've been suggesting that they go through a daily routine, especially the Thursday before the jobs report. A big potential catalyst and a chance for us to have a major breakdown. You should have been setting alerts on the upside for bullish stocks, so that if the reaction is bullish, you're going to be getting alert, 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 alert. And when we get that nice big move to the upside, you'll know exactly where to look for opportunity. Same thing on the short side. Look and find those bearish picks, not Friday morning, Thursday night. Go and do this. This is so important. Alerts don't cost you a penny. They don't tie up any margin at all. And there's no emotional attachment to them. So alerts are the best thing that you can possibly use when you're trading, because even when the alert is triggered, it doesn't mean that you have to take the trade. You evaluate everything that's going on, and then you make a decision that, yes, this really looks like the setup that I was looking for. I'm going to take that trade. And when you do that, you don't have to go gonzo. Take at least a starter position if you get everything that lines up. And then once you have a starter position, if it starts to perform right away, you can add to it. And your average cost, in this case, we're shorting. If you short it early and the market drops and the stock drops, you can add to that short position, because your average cost will still be much higher than the current price of the stock. And so worst case scenario, if the market for some reason reverses and goes back up, you can always scratch the trade. But if the market continues to go down, you can continue to look for opportunities to add to those positions, knowing that your average cost is still much higher. That's how you have to do the trade. But at very minimum, you got to take the starter short position. You got to get that first leg on. And because it's relatively small, it's not going to hurt you that bad if you're chicken for some reason. Okay, so that's the setup that we got out of everything that could have possibly played out. And I posted this comment right here, 8:56. This is Central Time. So this is 25 minutes into trading on Friday. Number one, I would favor the short side here. We are back below the 50-day moving average. The early bounce was smacked down. VIX is rising. We have a bearish 1OP cross. And we have SPY on a sell signal, M5. These are our new trade signals. They've been fantastic. If you haven't taken the free trial, come in and take the free trial. You're going to see me flipping through charts, and you're going to be able to see the buy and sell signals on the charts. So now let's go through and take a look at the market itself. We get this big rally, we get this compression just below the all-time high. This is a lower high double top formation. We had a long red candle on Tuesday that was a sign that there was some selling pressure and some weakness. We still could not get aggressively long because we're sitting above this major moving average, and we had a major news event. So let's see how that plays out. Now let's go into the 5-minute chart, because we can see what the market has done. And by the way, I think what we're going to see in here this week, my market analysis is that we are going to test the 100-day moving average with ease. We might actually even test it tonight, Sunday night. As I recall, Friday after the close, the market continued to sell off a bit. So I don't know how the futures are going to open up. They're about an hour and a half away from opening right now. So you got some starter swing short positions on Friday. Great. If you look back at the chart, any one of these really super long red candles, in fact, even this long red candle from Tuesday, you can see an attempt. There's some retracement back into it. There's some retracement back into it. And so buyers are going to try and see just how heavy the selling pressure is and that perhaps this move was overextended. So watch for those retracements back into this long red candle. Any retracement into it is going to set you up with a shorting opportunity. And we know that there is negative bias right now. If I look ahead at what the next major news event is, a week from this Wednesday, we're going to get the FOMC statement. Everybody's expecting the Fed to ease a quarter point. The question is, are they going to paint the picture for future rate cuts this year? We don't know, but the market is certainly going to be looking for some type of hint that yes, we're going to be progressively easing now that we've seen some economic weakness. And by the way, when it comes to economic weakness, realize that the US has really been the cornerstone to global growth. China is struggling, Japan is struggling, Europe is struggling. They have been for 6-8 months. There really hasn't been a lot of growth anywhere outside of the US. And for those who are always wishing for Fed rate cuts, seeming that that would be a bullish thing, be careful what you wish for, because we're going down a very slippery slope where we are one of the only countries that's really had decent economic growth. And now all of a sudden, if we start to stumble, where's that growth going to come from? And you'll be constantly in a catch-up type of mode where, did the Fed wait too long? How much deeper is this recession going to be? How long is it going to last? And so initially you get the bad news is good news crowd. And initially the market will be buoyed by Fed rate cuts. But eventually that starts to get old, especially if we see continued economic weakness coming out in some of the reports. So what I'm looking for technically, okay, that's the fundamental backdrop of what's going to be happening. And the FOMC statement is going to be critically important. And that will be the next thing that the market really focuses on. And so what I'll be watching for is any kind of retracement into this long red candle that hits resistance below AVWAP-Q. That's going to be a nice opportunity to enter additional short positions. And I am looking for a test of that 100-day moving average and perhaps even a breakdown below it this week. So any bounce is going to be an opportunity to add to swing shorts. And again, if we look at any of these long red candles, there's a long red bearish engulfing candle, and you can see retracement into that long red candle. Yes, here you get a long red candle after, this is a second one in here. Now, the second one, you start to see a little bit more follow through. And we may see a little bit of follow through here. My point is that if you don't have any swing shorts on right now and you just couldn't pull the trigger on Friday, then wait for a little bit of a bounce in here. If we don't get one Monday, maybe we'll see one Tuesday or Wednesday, but this is really your chance to establish that first leg of those positions and to give yourself an excellent entry point and put yourself in a position of power to where you can continue to add to that position knowing that your average cost will be higher than the current price, giving you plenty of buffer. So that's why we hang on to swing short positions, by the way, because even though it might be a starter, we don't know if the market's going to have, boom, another big leg lower. And so the mentality that you have to be in is Yes, I had a nice entry point in here, but I realized that I might have to weather some bounces along the way. But because my entry price was so good, I will be able to weather them. And if the market simply stages another big leg down, well, then I can be looking to either just take gains on my initial position, or I might even still be considering an add to my other positions, knowing that my average cost, my entry point, was excellent. So what am I saying? Well, Jesus, what does all this mean? What it means is you got to wait for a bounce in here. If you're not in, you can day trade from the short side all you want. Any kind of bounce that you get, you can day trade on the short side. And just because the market's made a big move like this, don't think that all stocks have exhausted their downward movement. They haven't. In some areas like tech, perhaps they're getting a little bit overextended, but there are many other stocks, for instance, banks, where the move is just kind of starting. And you have great opportunities to enter short positions without feeling like you're chasing, because those stocks are just starting to roll over. But this is a crackdown. We're going to see additional follow through selling. So the prevailing mindset is market going down. Okay? We're waiting for that price action that tells us which way we're going to go. We have it. Okay? We know. Market's going to go down now. So it's great as a directional trader, because now you're only focused on trading the short side, looking for short trades, waiting for bounces, waiting for those opportunities to enter well, be it day trading or swing trading. So that should be your mentality right now. And I think we're going to have a clean, let's call it 7 or 8 trading days until that FOMC statement, where we should see some additional selling pressure. So today, I'm not going to give you a bullish and a bearish pick. I'm only going to give you a bearish pick. But let's take one more look at the price action on Friday and the clues that we had that this market was headed lower. So again, we get the bounce above the 50-day moving average. That is a VWAP-Q on the SPY. That is another support level that we absolutely obliterated. And here is the 5-minute chart. So here's the price action on Friday, and you can see the first candle of the day was very bullish, and the market rallied. It was down in here pre-open, and then the unemployment report came out, and they rallied all the losses back and then some. Well, this is extremely suspicious. I'm going to bring this up so you can see 10P. So we had a 10P bearish cross right in here, and looky there. The second candle of the day was a long bearish engulfing candle. So this candle here was instantly smacked down. This is where I mentioned to members, this is bearish. We're going down. And you can see we easily took out the low a day. This is where you can add. You get a little bit of a bounce in here. This is another tell that we're going lower. Look at that big bounce, that attempt at a short squeeze in here. I believe that coincided with one of the Fed officials saying that, yes, we feel that the Fed should be in a position to ease now. So the market had this big but very temporary attempt at a bounce. Whappa! Smacked it down, played whack-a-mole with it, because the sellers were looking for a good entry point. And they see that headline, they see that bounce, whap, 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 whap. When you see a reversal like that, if you are looking to short, that is your all clear, go ahead sign that you should add to that short position. And here you can see a sell signal the previous day on SPY, and this is a really powerful setup for our new trade signals. When you have a 5-minute sell signal the previous day, you drop an alert line at the low of the day from the previous day. And when you get that alert from setting it right there, you would get it right here. money. Got that sell signal from the previous day, got a new low of the day, and there's your follow through. If you're members of OneOption, please go through and do your searches tonight. Look for those really weak stocks that are breaking through major moving averages. Set those alerts for Monday morning. Wait to see how the market opens up, and you're going to be getting those alerts triggered. Those are going to be your best prospects for day trading. For swing trading, you can even use a little bit longer time frame, perhaps even an H1 time frame. And I like using H1 time frames in this instance because D1 is going to be much more resilient because that's daily. Okay, so it's harder for me to flip a daily chart than it is for me to flip a 1 hour chart and or trade signal. So some of those stocks that are still on a D1 buy signal, it's going to be harder to get them to a sell signal even if they had a nasty day on Friday. But the H1, the 1 hour trade signal, will have already flipped from bullish to bearish. And then we need to look at that bearish price action, like through a major moving average, through an upward sloping trend line. As long as we have some other type of technical breakdown, bam, that is going to be where we want to be looking for opportunity. So let me go in and take a look. I created a search, and I'm going to go through the different variables that we're using for custom search. And so in this instance, I'm looking for a bearish trade signal on a 1 hour basis. I'm looking for a bearish trade signal M5, 5-minute basis. I don't want to have any ETFs. I'd like to have decent option liquidity, although this is not a requirement. You could certainly look for stocks that have excellent volume and perhaps that trade above $10 or $50, whatever your parameter is. You'd get many more stocks. I'm simply doing something that's going to have some really good option liquidity. And then decent volume on Friday, of course. With a sell-off, you'd like to see good relative volume. And then here's the kicker. Show me a stock that had a bearish cross on Friday. It could have been the 50-day moving average, could have been the 100-day moving average, could have been the 200-day moving average. But in any of those cases, the stock was above that moving average on Thursday. Friday, it closed below it. So that breakdown is just getting going. And this would have been a fantastic search to run Thursday evening, dropping those alert lines as I suggested. So let's go through the list and let's see what we've got. I'm going to take this off screen so that it doesn't obscure the chart. And what do we have here? 8 stocks or so. And I'll tell you why I like some and why I don't like others. I'm going to go into the daily chart because we want to start our analysis on a longer term basis. The first one is AVGO. Pretty big breakdown here below the 100-day moving average. You'll see that they announced earnings after the close Thursday. So this was an earnings reaction that was set up. The stock was already way down Friday morning before the jobs report came out. This wouldn't be a pick that I would take unless it could get below the 200-day moving average. And if it does that, it would also be taking out a longer term upward sloping trend line. So what do I do with that information? Well, I don't have to do a trade. I can create an alert. I'm going to go in and do this because I want to show you how you should be doing this. I want it below a moving average, and that is the 200-day moving average. And when that happens, I am going to be alerted. And that would be a nice entry point for a short because in all likelihood, the stock is going to continue to go down. BAC, let's zoom in just a little bit. So you can see this is kind of a good example. again, the buy signals on a D1 basis are going to be pretty stubborn because we're talking about a daily chart. But that is some pretty bearish price action the last 2 days. This simply has not flipped yet, but with any further weakness, oh, it will. And you can see how the stock is below the 100-day moving average. It's below AVWAP-E. It's below the 50-day moving average. This is a nice move. I like BAC on the short side. Let's take a look at that 1-hour chart. And there you can see there's your sell signal on a H1 chart. And let's take a look at a 5-minute chart. And there's your gap down, and there's your sell signal on a 5-minute chart. Beauty. So, yes, I think BAC could be my short pick, but I'm going to continue to look through, see what else we've got. So, next on the list is Google. That is a nasty breakdown. You can see it's even below this low minus trend line. It took out the 200-day moving average with ease. So, yes, I think Google is an excellent short candidate. And look at that drop right in there. So if you had done as I suggested Thursday evening, Google would have been on your list. You would have come in, you would have clicked GTC, you would have gone click, click. It would have dropped that alert line. And after 10 minutes of trading on Friday, with the sell signal the previous day, stock below previous day's low, all the things I've already mentioned lining up on the SPY itself on a daily basis and a 5-minute basis. Ding, 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 ding. I just got myself a really nice entry on a Google short. And that stock dropped from 158 down to 152. Stock doesn't have a lot of option implied volatility, so you can buy options pretty cheap, and that is a big move, and the bid-ask spread on those options is very tight. Is Google a stock that I would short right now? You can see that typically on a long red candle like this, it retraces, okay? And I can go back and look at a bunch of long red candles that retrace. It doesn't tend to make big back-to-back-to-back moves. So would I consider it as a short? Yes, but it probably is not going to be something I want to jump on immediately Monday, because I think this is the type of stock that's probably going to rally up a little bit and bounce a little bit over the course of the next week before it stages its next leg lower. But sure as heck, that is a weak stock. So let's continue to go through the list. MS is another stock on the list, and there you can see lower high, double top, long red candle here, convincingly through that 100-day moving average. Yeah, this is actually a nice looking short as well. Let's take a look at that 5-minute, because we know we've got a sell signal there. So here, if you're going through and doing your research and using the system that I had told you, you're looking for a live sell signal on a 5-minute basis. This stock would not have come up on the search because sell signal here, exit signal here, okay? So it's on an exit signal. It's not on a sell signal. But if it had been on a sell signal, whoosh, drop that alert line right there, and hello. So and not all the stocks are going to show up in the search that I have right here, because I've got a couple of other variables. So let me just backtrack for a second. What the heck did that mean, Pete? There were so many dang good stocks that had a M5 sell signal that you could have been dropping these alert lines on. The search that I ran here is very selective in that I don't want any ETFs, and I want a bearish SMA cross that happened on Friday. This is going to disqualify many, many stocks, the vast majority of them, because maybe Thursday they broke that major moving average, but they didn't break it Friday. Maybe Wednesday they broke that major moving average. So they were already selling off before the market did on Friday. So this is a big disqualifier, and that's why we aren't getting many search results. But I didn't want to have 50 stocks that I had to go flipping through. The other one is option liquidity. I'm looking for very good option liquidity. If I just said, well, maybe the options don't have to be that liquid, even that, I'm going to start seeing some other candidates come up in here. And I think DKS and HIMS were a couple, so I might as well put HIMS up and see what that looks like. That's a nice little breakdown below the 200-day moving average. So that looks good. SQ is another stock that was on the list. And Tesla's also on the list. SQ, a little bit too choppy for my taste, okay? You can see up, down, long red candle. Yeah, we've seen a couple of other long reds in here. We can expect maybe some follow through on it. There's a good breakdown below the 50-day and AVWAP-E, but you know, there's still some horizontal support in here. Just the fact that it's very choppy relative to some of the other stocks that have come up, it's not my favorite. Tesla, you can see how this stock actually has held up pretty well relative to other tech stocks, but that is one massively long red candle. But you do have a little bit of an upward sloping trend line here, which is kind of where the stock closed on Friday. Plus you got the 200-day moving average and the 100-day moving average limiting how far the stock can fall. So I'd kind of, you know, for me to want to short a stock like this, I need to see it blow right through this $200 level. And okay, now you're through all these support levels in here and I'm seeing follow through selling. That's weak. Stock's likely to go down, but right in here, I just wanted to see it cracking below those price points. BAC right now is one that I really like. DKS was also, DKS is a post-earnings decliner. You can see earnings there, big gap down, follow through below the major moving averages in here. Yeah, I think DKS is probably going to be a good short, but again, choppy. So I'd prefer something with a little bit more of an orderly pattern to it. And again, Google, you can see, has been in sell-off, rally, and this is a great tell. Okay, so market sold off. Market rallied to get back almost to the previous all-time high. What did Google do? No. Google didn't get anywhere close to the previous high. Well, how do I know all this? Because I studied charts. I've already told you what the market did. So in the back of my mind, I'm knowing what the market did. When I look at a chart, this thing barely even bounced. So it started to roll over. It could not get back above the 100-day moving average. It struggled to get back above AVWAP-E. This stock has been weak for a very long time, and that's why it would have been coming up on bearish searches well before Friday. So right now, BAC, and you can see this is nice orderly price action, okay? When it sets a move, it tends to follow through. When it sets a move, it tends to follow through. Now it's setting another move, and again, didn't get anywhere close to the previous high. So yes, I think BAC is going to be my bearish pick, but I'm going to flip through a few others. I'm just going to go through bearish search, and let's go through, well, you can just see a lot of stocks on that bearish SMA cross on Friday. Red Royal Flush. Take this down so you can see. And I have filters on here, so I've got stocks filtered so that it's only showing me stocks with excellent option liquidity. I'll just flip through some, going to do some technical analysis on the fly here. Yes, nice follow through. SMCI, bearish stock, love it. Going to be a good short. Meta holding its own very well above this major moving average. Good relative strength. Meta would not be a good short. Coin, I've showed you. Beautiful. Might be getting a little overextended here, but excellent selling pressure. Very, very weak stock. Microsoft, yes, barely bounced. Resistance at the 100-day moving average, coming up to a low plus trend line right in here. So may find a little bit of support there, but it took out the 200-day moving average. This stock is also weak. This is a good short. TSM breaking below the 100-day moving average. So what is this search anyway? This search shows me stocks that are on a bearish trade signal across M5, 15, 30, H1, D1, across multiple time frames. And when we have sell signals across multiple time frames, it strengthens the sell signal. So we have confirmation across many different time frames, many different slices. So my TSM, yeah, that's a nice breakdown. Little bit of a choppier stock. You could see that by the mixed overlapping candles in here, but looking like a good short. AMAT, yes, AMAT taking out a low plus trend line in there. So I don't know that I need to go through too many more. MSTR really needs to clear that 100-day moving average, but this is what you do. You just go through, you start flipping charts, you start looking for those sell signals, start looking for those weak patterns, and then by all means, if you get into a stock that has a weak chart, you're going to want to see that M5, which let's do that. You want to see that M5 sell signal, like right there. And here's what you should be doing. This is so easy. You see the stock. It looks good. Do I like Google? Do I like BAC? Do I like Tesla? Find those support levels. Click GTC. Whoops. Clicked on the wrong bar, but now I'll have two of them. It's all right. Now, tomorrow morning, Monday, the market opens weak. Stock tries to rally a little bit. Maybe the market tries to rally a little bit. Blam! Takes out the low of the day from Friday on a sell signal. I've got myself a really nice short. And I didn't have to do anything, but it took me 2 seconds to set that alert. So I would be doing that on every single one of these stocks. NVIDIA, D1. NVIDIA's hanging in there pretty well. I mean, that's not a huge sell-off for a stock on Friday, given that QQQ got absolutely annihilated. Take a look at QQQ. There's one more thing I wanted to do. Look at that big sell-off right in there. So let's do that right now. I had mentioned VXX on a 5-minute basis. I had mentioned that in my pre-open market comments. There was your first bar. Look at the second bar of the day. If VIX is rising, a short's going to be setting up on Friday, especially if we are seeing long red candles in a gap reversal. Boom, 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 boom. Steady climb higher. That was another clue. And OneOp was telling us we had a bearish cross in here as well. So this is already telling us we need to be careful. OneOp, what does OneOp do? Bearish cross the previous day right in here. We're waiting for the breakdown. Aha! There it is. Back below VWAP. Short, short, short. Excellent short. In here, bullish cross. Might be time to take gains. Bearish cross, OneOp. Right up in here, before the high is in. Upward sloping trend line, bearish engulfing candle. Take a short here, take a short here. Nice follow through. That's how OneOp works, okay? So in any event, that's what you should be doing with your trading right now. Look for those bearish searches. Look for those bearish trade signals. Look for those breakdowns below major technical support levels and set those horizontal alerts at the low of the previous day. If you do this, you're going to have a great week. Thanks so much for watching, everybody. We will see you Wednesday for our live event.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.